Hope you're well. All right. That stuff is terrible, but it works. Let's wake up. All right. So today, Friday, July 11th. This is doing it live. We'll do our morning checklist. We'll dig through everything. We're going to do a little bit of our weekly reassessment as we head into the weekend. As you know, Canada facing more tariffs. We're going to do this again. That'll be fun. And we'll talk about 4 trillion reasons to be excited about the market. I do feel a little bit better. Thank you, Adele. The pain's not up here anymore. The pain's in my right hip. So it's just roving arthritis. So next week it'll be the toe. And then the following week it'll be my hands. And we'll just go from there. It's just a joy being in your 40s. We're just going to keep doing that. Once again, if you're not joining us before 9:30, you're somebody's exit liquidity. When the market opens, we're going to talk about the stocks worth engaging in trading today, whether this market is even safe or if it's starting to become a trap. It's starting to become a trap. And exactly where smart money is positioning. So, as you know, you are new joining us for the first time. I hope so. Hope there's some new people out there. We focus on the markets through the construct of momentum. Momentum. I agree with you, Eric. I deserve much better coffee. I'm thinking of the scene in Pulp Fiction, the coffee scene. If you are new here, we do something every single day. And this is our gift to you because it is really, truly how the markets work. What we are doing is we are measuring the number of stocks that are breaking out versus breaking down. So we take a look at stocks up in a very certain pattern versus the number of stocks that are down in a very certain pattern. And that gives us a number. And if that number is positive, we are happy. If that number starts to move negative, we have to pay attention to where that capital is going. And one of the key things that we do is we watch key technical lines. So on the SPXL, which will give you a pretty good understanding and assessment of where we sit with the S&P 500, we see the SPXL is well above its 20-day EMA. And why is that important? Well, it's important because how is the capital, what is the money that is really driving that? Well, the money that's really driving that outperformance is in the Magnificent Seven, given the weight, given the sheer amount of passive investment that is tied up in these stocks. But when the Mag 7 stocks start to drop, what we are witnessing, and I've talked about this before, is deleveraging. And deleveraging is the key term that we have to know about because when volatility picks up, it's a lot of money and a lot of capital sloshing around, and all of a sudden everybody's trying to exit through the exact same fire escape all at once. So the FNGD becomes a very good tool. If we have a negative figure, we pay very close attention to the 20-day moving average. If we get above that 50, there is something wrong. That is a pretty good sign of deleveraging in the system, of hedge funds that have been leveraging up using a lot of different short duration T-bills to buy stocks on extremely high margin. And remember, all of these funds are doing the exact same thing. Why do they own why do they own Facebook and Nvidia and all of these other names? Because that's where the money is. That's what everybody's doing. And all of those ETFs that keep buying up all these stocks and holding these stocks, that helps provide a little bit of a floor, an artificial move higher, strong momentum. So when this breaks down, things get gnarly. And that's exactly what happened in April of 2025. It happened in August of 2024, happened during the Silicon Valley banking crisis in 23, late 23 as well, during the bond spasm where the 10-year went to 5%. This happened in 2022 during the gilt crisis, happened during the largest hedge fund sell-off in 15 years in June of 2022, happened during the Archegos sell-off in 2021, and of course, COVID. We are having these big events and they're transpiring once or twice a year. And when this gets ugly, there are different strategies that you can employ. As a long-term investor, don't dump your stocks. If this goes negative and we start to move higher, what we're going to be doing at that point is pretty simple. We're going to A, sell calls on existing positions. And in some places, do it in the money. You do it in the money. Because if the stock falls and it falls under that strike price, you're going to be able to collect that premium. And then what happens in that environment is you're waiting for insiders to buy and you're waiting for a policy shift accommodation. We're not there yet. I'm just going to remind you, that's how the markets work in the post-2017 era after we started to refinance the United States economy on short-term treasuries, treasury bills. We're not negative, but we have to pay very close attention to this because we were pretty strong a couple of days ago. We were up around 28 at one point. Now we're down to 3. So what is strong right now? There is that rotation to value that we have talked about. We're seeing some of the builders start to get a lot more momentum. We've been talking about this for a couple of weeks. All of those 13Ds, 13Fs that we went through when we did that insider week, we saw a lot of housing stocks, and those names are starting to break. If you are late to the party on a BLDR, the natural way to trade this is to see if we can get above that 200-day EMA, and then that becomes your floor. That becomes your floor. In addition to that, it's not what I want. Kratos, KTOS, another name. You've been following us for a couple of weeks, a couple of months. We've been on Kratos for quite some time. 30 up to 47, very strong momentum. And again, if you missed out on this stock, pretty simple way to trade it. If we retest the 50, buy. If we retest the 200, definitely buy. On top of that, Circle. This thing just keeps running. This is a Cathie Wood stock. But once again, this is basically going to be the backstop of the entire financial system, I guess, because at the end of the day, it's going to come down to the stablecoin operators that are going to be buying up all of those short duration bills, part of the Genius Act. The key thing to be paying attention to with Circle is just understanding that it's going to be built heavily on momentum. This is going to be a stock to trade. You're going to see a lot more financialization around this name. It is a very good volume-weighted average price stock to trade. And ALB remains in the news. Albemarle, stronger momentum, kick higher. It's going to probably try to test that 200 once again. But we're seeing, again, that rotation on materials that we have talked about. Remember, FCX and all of those other names in the copper space are certainly back in play, but recognize that we just finally hit the news portion of that trade. So I want to just use FCX as a good reminder that the move already happened. Now, if you were listening to Blake last week, you were listening to the conversation Blake and I had. It was a very short conversation after a show. But he said, I'm seeing in all of the data set, right? Seeing in deep currents, a move into rotation into materials. And that was back here. And this is important because it starts in late June and we start to see that move higher in copper. The reality is there is no such thing as coincidence in the financial markets. People knew about policy. People were going long copper. And then a couple of days ago, you get the Trump announcement around copper tariffs. The move already happened. And what happens? The news hits. Everybody gets jazzed up, amped up. And what turns around? FCX drops. It was a sell the news event. And now the question is, where do you try to re-enter in an environment where the expectation is the same? Well, you're going to wait and go to the adjusted hourly in the intraday. And if you retest down here, then you're looking for continued momentum up. Again, markets don't go straight up. There is a process of channels of higher highs and higher lows because algos are taking gains along the way, buying the dip, running higher. And you'll see this as well with a lot of equities where they enter a channel and they start to trade lower lows, lower highs, and takes a stair-step pattern down. Very important on the technical side. Gianni's talked about this on the breakout side up. But the key thing to keep in mind is that what you see is funds will be selling. And I'm looking for a good example of this. Let's go back to about Nvidia. back in April. No, right here. This February sell-off that started, this is a very good example of this. So our momentum indicator had gone negative on the 21st of February, confirmed on the FNGD breakout on February 24th. Well, you could see Nvidia taking this stair step pattern down, right? And I know that CMTs and everybody who loves technical analysis, they love to draw those lines. I'm not going to draw the lines, but it's accurate, right? It's true that what happens in an environment like this is Nvidia sells off. And what occurs in this environment, which is very tricky for retail traders to really comprehend and understand, is that the stock doesn't go like this. It doesn't just go straight down. Funds, there's so much exposure to Nvidia. If you all try to exit at the exact same time, the whole stock just collapses, right? You don't want that. Funds want to exit in a very structured manner. So what they are doing is they're selling off, and then there's no buyers. It's an exhausted period of time. So you start to see algos squeeze higher. You start to see a little bit of bidding. We get into the top of the channel, and then the funds use that new price, that higher price, to start to exit some more. And it just continues to roll off if momentum and that deleveraging is occurring. So lower highs, lower lows, stair step pattern down. Very important to keep in mind. And it takes us back to really understanding if you're going to be in the short term trying to short the market or trying to short a very specific stock, it's very important that you, whether you're on Thinkorswim or whether you're on TradingView, to always know where you are when you are trying to short a stock, particularly in an environment where 1 minute volume weighted average price, there is an extreme level of how wide the deviation bands are. Here's only a $4 move, but in some events, you'll see an ATR $16, $17. And resultantly, what you're looking for, if you're down here in the third standard deviation of price at like 12 o'clock on a Tuesday, and Nvidia is rolling lower, and you're trying to short it, and you are a disciplined, say, buying puts, here's the problem. If the stock falls into its fourth deviation and the stock continues to roll, what happens is all of those algos that are shorting, all of the people who are day trading and shorting, they're going to start to cover their bets. If you are looking for an entry into a down channel environment for a company like Nvidia, and we talked about this, go back to that one specific chart, you want to recognize, you want to look and know where you are. The better place to be buying puts, obviously, in a down channel is up here, not down here. Because if you are a person who is setting stops, or you're saying, all right, I got a 10% stop, a 25% stop, you could get wiped out in a day. You can get wiped out in an hour. So always just know where you are. Know exactly where you are. And if you're bearish, look for the opportunity and follow what the funds are doing, because again, lower highs, lower lows, you want to be buying into, particularly if you're shorting, into the lower high. Just keep this in mind. I don't know what's going on with the streaming hiccup. Everything's good here. I got a T1 line. Can't tell you. I'm going to have some water. Transition music. LMND, Team, ZS, and Adobe are the weaker names. Adobe is just, I don't know what's going on here, but Adobe just does not look good. And probably more weakness in the persistent future. Let's just get that spinning wheel of death going. That's perfect. So right when I said something good about my T-line, the technology started to fail me. Looking in the 1 hourly line, lower highs, lower lows, same thing. Looking actually for a little bit of a pop out of Adobe if we are following that channel, but we are under the 20, under the 50, persistent weakness in Adobe. Very, it's not like it's a terribly expensive stock. Book per share at 26 though, so maybe I will not say that. ZS, Scalar. So some of these other tech names that are not at the top of the S&P 500 are starting to show some weakness after this big momentum run that we've had. And that's important to keep in mind, because these are the names that really don't have that level of support at the ETF level, and these are the names that don't get a lot of leveraged emphasis. by those funds that are buying all the FANG stocks at once. So TEAM, this is an extraordinarily expensive, unprofitable company. A lot of exposure to concerns around workforces. TEAM, Zscaler, they're starting to go. And that's important because now the question is like, where is the next big signal, next big concern? And I'll mention that in a moment. But I want your watch list today. Tesla's back in play because Tesla's on the watch list every day. We had two opportunities to bid in yesterday. Really interesting setup yesterday at around 1:30 on the 3-minute chart. Came in right here off this adjusted 200-day moving average in the first standard deviation of price. Looking for another one of those opportunities today. We just have to be patient. In addition, BVN back in play. And I think yesterday we were talking about Shenandoah. I'll bring that up in a moment. But basic materials, wiring, copper, strength and momentum on the daily. Natural stop here at 1550. I'm here every morning learning how to trade. Appreciate my TheoTrade family. Thank you. Good to see you. WX Man Burr and NC. NC. NACO. That's coal. Coal and lithium. Interesting name. Interesting trade. Thermal coal and combine that with a lot of lithium exposure to NACO as well. So interesting to see this after this pullback. We'll be seeing if it can hold above that 20-day moving average. On the macro side, this is pretty much what you just have to be paying attention to. If you're a VWAP trader or you're somebody who's just looking for a cheap way to trade kind of swings today, Trump slapping 35% tariffs on Canada. That would be effective on the 1st. Broader tariffs likely coming down the lane on the EU. So virtually every single name that is tied to an ETF linked to one of the major economies in Europe, keep a very close eye. EWG, EPOL, these have been very strong momentum moves this year. That financialization of the economies over there, particularly in the EU with defense, that is a very strong force for momentum. But if this starts to break down, if Germany starts to break down, just keep this in mind. It's people taking gains off of a sizable move this year on some of these ETFs. But in the meantime, you have FCX, you have COP. Watch the UUP. That is the dollar ETF FXC. That is the Canadian Dollar Trust. These things will bounce around, and they typically don't have much vol. I think the UUP is at like 1. So the dollar could get some strength if you're trading it directionally. $27 call into next week becomes an interesting trade because it's probably going to cost you $21 or $22 to handle 100 shares, and a move to the upside with a natural stop, just a test back here of 13, 14 cents. That can be a 50% gain depending on the short-term recovery. But paying very close attention here. Lower highs, lower lows for the U.S. dollar, and the expectation is more weakness. But in the meantime, if this heats up over the next couple of weeks, I would be expecting that the U.S. dollar will see some strength. In addition, AMD got an upgrade. Nvidia hit $4 trillion. AMD jumping into the AI chip side. Keep an eye on AMD and SMH. All of the components of SMH. SMH is the VanEck Semiconductor ETF. All of the names are here. Nvidia, Taiwan Semiconductor, Broadcom, AMD, Applied, ASML. We have ASML earnings coming. Texas, Lam Research has just been an absolute runner. Micron and Analog Devices. But I just want to note, this is a very sizable run that we have seen. A lot of it is built on the back of new liquidity and more leverage in the system. And Nvidia right now is currently hovering after a monstrous run in April, after that huge sell-off in the major insider buying period. Stock's almost doubled. Profit taking is not something that would shock me in a month like this. Just look at SoFi because you asked. I mean, that's a hell of a run. But once again, I believe a lot of crypto focus. This is very stretched. that is overbought. Easiest way to put it. Um, if you're in it, it's a good opportunity to take some profits. Um, Delta, all the airlines back in focus as well. Now, this is the core thing to keep in mind. July, you get into the seasonality debate, and I can't remember who it was, but somebody just wrote a report about a year ago, basically saying, yeah, seasonality is BS. Um, I don't really care because at the end of the day, I'm really just focusing on capital creation and momentum in the system. But July is typically a good month historically because of post earnings momentum, institutional window dressing, a lot of inflows after tax season. Plus, you have that rotation after Q2. And September is typically the caution zone. That's been consistently the negative month, and that's been driven by mutual fund distributions, institutional rebalancing, and kind of that macro jitter with a lot more volume coming back into the market. That said, Nvidia is $4 trillion. There is monstrous hype around the AI environment. And it really is now, it is Apple back in 2017, 2018, 2019, 20. The argument was very simple. So goes Apple, so goes the market. Nvidia is the same thing now. Nvidia is the top dog. It is so heavily owned in in the passive investment space. There are over 500 ETFs now that hold Nvidia. Now, to put that into context, Apple used to be the top one of that. I think it's Apple's at like 586. So Nvidia has come out of largely nowhere, in the last 6-7 years to rival Apple, which had consistently been this monster of passive investment flows. Tesla's up there as well, but Nvidia really represents the momentum in the entire system. And what's important right now is the strength of this chart, NVDA. It really is something to behold because it speaks volumes about the way that the markets operate and the impact of Nvidia and how quickly it rebounds when we have these major events. And I'm just going to just repeat this one last time. Okay. If and when the markets get their heads kicked in because there is a deleveraging and you get that spike in insider buying and you get that policy change, buy Nvidia, buy Tesla, buy Apple, but definitely buy Tesla and Nvidia. And what you're looking for is strength above its 20-day, strength above its 50-day, strength above its 200. And just so you know, this is the same pattern over and over and over again. This, right, sell off, squeeze, dump, insider buy, policy shift, momentum return, market takes off. Same thing, August last year, Nikkei crash, sell off, pop, squeeze, dump, insider buy, policy shift by the Bank of Japan, market takes off. Momentum returns around the 13th. Back here, like it's in the charts, everybody. You can clearly see it. It's right there. This is the gilt crisis. This was a policy shift. This is the near doubling of the stock in 2.5 months. Do you see what I see? Do you see it? It's right in front of you. And it's the same thing over and over and over again, which is why, when we're talking about Tesla and we're doing the core of the masterclass, that lesson yesterday and that lesson on Tuesday was really ingrained in understanding how all of this works. Because people keep asking, should I buy Nvidia? Should I buy Nvidia right now at an all-time high? And I'm going to tell you, the easiest thing for you to do is to wait. And to wait for the next one of these. And you're going to say, well, that seems far away. It's not going to be. There's 2 of these a year now. And I want to just point out that at the end of the day, like there were complete strategies built around crisis, right? Basically, there was an article written by Nassim Taleb years ago about Victor Niederhofer, a hedge fund manager. And Niederhofer was selling volatility constantly, selling volatility, just sold vol all the time, just sell vol. And that is a strategy that a lot of people have called picking up pennies in front of a steamroller. Well, the problem was, I believe Taleb went and saw him, and the story goes that instead of coming away thinking that this hedge fund manager was this incredible genius, he gets the sense that maybe he's just the guy who survived. And it goes back to the survivorship bias, this idea that somebody has to win the national championship in basketball. Somebody has to win. There's 64 teams, or now there's going to be 78, but somebody's got to win. And that winner might not be the best team, but they got there and they won. And the question is, how did they do it? Was there luck involved? Was it random? And Taleb wrote the book Fooled by Randomness. And then he wrote The Black Swan, which, again, was one of the more instrumental books of that drove me back into academia. But that said, why does it matter? Because Taleb created Universa, the Universa Fund. And Mark Spitznagel, Jeremy Spitznagel, is now the head of it. And what these guys do is they basically are just constantly buying puts and willing to lose a couple of months at a time, maybe 3 years at a time, but it's when it hits and the puts pay off and you have like a 3,000% month like they did during COVID. But here's the issue. It's gotten predictable now, because back in the post-2008 world, we were only having these events transpire once every 3 years, once every 4 years. Now they're happening once or twice a year. So it is getting predictable, and the ongoing situation continues to be wait, because what they do over and over again, they bail the system out. They have to. They can't risk any of it, but they have to have all of the leverage in the hedge funds. They have to have the funds coming in and buying up all of these T-bills. So is Nvidia going to get back down to 100? Maybe not 100, but 120 certainly seems rational in a crisis environment. And once again, just follow that pattern and wait and wait and wait. And yes, you can buy the dip. And every time that the S&P 500 gets down around that, not 100-day, but that 200-day moving average. Is that it? It was 200-day moving average, EMA. Let me look at the simple. Yeah. You're getting down into that 200-day. That's typically where we're seeing some accommodation on the policy side. So just be patient, ride the lightning as we move higher, and always look for these types of moves, because the high beta stocks, which is evident in the HIBL, these are the names that really run when these events happen. They break down fast, but they take off even faster. And it's just important to know ahead of time, this could be a significant event. This could be a significant sell-off. And if that's the case, what are we actually paying attention to? What are we actually looking for? We're looking for a policy shift. We're looking for the insiders to call the bottom. This has been the market over and over and over and over and over and over again since 2009. So just keep all of this in mind. Nvidia is the canary in the coal mine. And if this rally reaches fatigue, it's very, very, very important for it's very important to keep an eye on this. We have to watch distribution patterns. We have to look for failed breakouts. We have to look for RSI divergence. It's all going to be here on this chart. And what you're looking for, we're currently overbought on the MFI and the RSI. We want to be looking at the MACD, looking to see if this rolls over. I'm going to be looking to see if we can get any shift or change in the ADX. This ATR is only at 3.5 right now. That's pretty wild to see. There's just no vol in this at the moment. It's just going straight up. It's just going straight up. So be a little cautious. We don't have a lot of selling pressure at all in this market, but the buying pressure is starting to alleviate a little bit. And that is that. A couple minutes left. All right. So on the insider front, always pay attention to this. Just see if there's anything new, anything exciting. We got that BTBT a couple of weeks ago. BTBT has been quite a performer since that insider buy. BTBT has gone from $2 to around 360. Moved as high as 4. I know some people were taking profits. And people who had entered that position had asked, well, what's the natural stop? The natural stop is back at the 200-day moving average. In addition to that, just take a quick look. Asana, again, more buying. Asana really is another one of those names that is like Team, persistent pressure, persistent weakness. It is a momentum stock at the end of the day. So you're looking for these extreme bottoms. You're looking for oversold conditions for a squeeze, but not really a stock that I really care too much about. Definitely don't like it for any investment purposes. Biotech names are getting a bid. We've talked about the LABU, strength in the biotech space. You're seeing a lot more bidding, but again, it is very weak right now in the CFO and CFO space. Only 2 things above 100,000, and the selling in Oracle and the selling in Nvidia and the selling in Arista and Robinhood and everything else. Just keep in mind, executives are paid in their stock, so they're always going to be sellers. It's when we see the extreme periods of buying that we want to be paying attention. On the other side, Lightwave Acquisition Group, that sounds like a SPAC. Lionsgate Studio had seen some buying, and Shenandoah Communications Insider, ECB Fiber Corp. This is a fascinating story, and I'm going to dig a little bit deeper into it over the weekend. But from an insider perspective, SHEN, this is a buy. Shenandoah Telecommunications, fiber optic cable and connections to Middle Eastern sovereign wealth funds. Everybody, as I said, the entire construct of this is the rent extraction that will be continuing from sovereign funds in the future. This insider buy, very strong strength in the future. So looking at that, you guys keep asking me about these. Look, guys, I'm going to tell you this. I don't touch any of this stuff. I don't like any of this stuff. I don't like these option income ETFs. I don't like the financial innovation around any of this stuff. There's just it rubs me the wrong way. I haven't studied a lot of it and how they're structured, but off the bat, I feel like there's something wrong. I just feel like there's something wrong. So the pros and the cons of this. God. The last thing I read on this, Bloomberg, that would have been a month ago. So yeah, there's high income potential, right? Because the distribution rates are significant. Dividend 59%, you see that. And it's definitely appealing for retirees, people who want cash flow. It's single stock options, right? So you got Nvidia and Tesla and MicroStrategies and some of this stuff. Keep in mind that when this stuff breaks down, it really breaks down. So it's going to follow a momentum, the momentum structure, because once again, people are dumping, just getting out of assets when necessary. So you got to be very careful with this, because once again, this aligned perfectly with the FNGD, positive momentum back on the 23rd, 24th, 20-day moving average breakdown, starting the exact same time that we saw the negative move on our signal. 16 took you down to 11. So there's some danger there, right? The packaging of this stuff, and this, it's sold as like a way to save time. There's capped income, obviously, because it is These things are covered call structures, so that obviously there's limitations. Um, the net asset value erodes. The distributions include like substantial return on capital that will lower the net asset value over time, right? Because you're going to be sucking the capital out. I don't know what the expense ratio is. Is that on here? I bet it's probably like 1.5, which is high if that is true. They have underlying fund fees and management fees. Um, the question is, like I remember somebody said something about this, like Tesla stock had gone up 100% in a very short period of time. But then I know that there was the TSLY because somebody asked about that yesterday. And again, this thing just goes sideways. I don't like this stuff, right? It's it's one of those things where if you're gonna be involved in any of it, definitely monitor the 20-day and the 50-day moving averages. Because if the markets are breaking down, these things become like closed-end funds in that everybody rushes to the exit at the exact same time and nobody really seems to care, right? So they're just gushing this stuff out, and you end up in a situation where this fund that you were told can really deliver a lot of cash, well, the market breaks down, Tesla breaks down, and now all of a sudden you're down 50% on your position. Yeah, you're pulling some capital out, and that sounds very attractive, but at the end of the day, it's really those crisis moments that can destroy the value of these things. All right. Cool. 9:22. I got to get out of here. We are going to dig into some insider focus today. We'll be looking for some reversions this afternoon and back trading Tesla. I'll be in that chat room relatively soon. Don Kaufman coming up. I am on the West Coast next week. Take it easy on me Monday, please. Take it easy on me come Monday because I'm going to be exhausted. I hope you guys have a great day.